Analysis. Julia Lee joins us from Bell Direct to tell us what was behind this pullback that we saw in the Aussie market today.
Friday, this morning I said that we were looking for that 4,714 point mark and watching to see whether the market would close above that, which would have been quite a bullish signal. And of course that was the peak that we saw last Wednesday around about the same time last week. Now, we didn't see that close above that 4,714 point level. We were pretty close at 4 o'clock at 4,712 points, but then we did see a sell-off on the close, so closing just above that 4,700 point mark. Now, if we have a look at the market today, we did see quite a big sell down from around about lunchtime, which contributed to a lot of the declines by the close of the market. We did see some disappointing export data coming through from Japan. In fact, the 11th consecutive month of declines in these export numbers. So that was a bit of a disappointment. We also saw a negative lead flow through from the US, but I suppose what was more important for our market was the commodity prices, which tumbled overnight. We saw oil, gold, base metal prices all lower. So that really impacted quite strongly on the materials and the energy sector. Both of these sectors led the losses on the Australian share market. In fact, only a couple of sectors actually managed to finish in the black. One of those was healthcare, and generally we did see a move back into those defensive areas. So those defensive sectors did outperform the rest of the market. We saw volumes come back to the market, and that's because Japan's back from its 5-day holiday. So the best volumes for the week going through today, and the best value traded as well.
Now, just looking at some of the company news that we had out, Karoon Gas shares were sold off on some bad news, Julia.
Karoon Gas shares were sold off very heavily. In fact, they were the worst performer in the large cap category, with the shares down by a massive 18.7%. Now, they did get some news in terms of their second exploration well with joint venture partner ConocoPhillips, and the news wasn't good. Now, this particular well is called Kentucky, and it looks like they have penetrated 40 metres of sand over a 460-metre interval, but they're very close to the bottom now, so there's not much prospects in terms of another big find. So they're aiming for a depth of about 4,600 metres. They're at about 4,490 metres, so not a lot of room there. I think the market's all but written off this exploration well. What the market has been hoping for is another great result like it did with its first well with joint venture ConocoPhillips, and that was the Poseidon #1 well, but of course it ran into some technical difficulties, so it wasn't able to complete the production data testing. So I guess the market's hopes are now pinned on the next well, and that's Poseidon #2. If we have a look at Karoon Gas's share price, this is for the year. This is what it looks like, and you can see that there's been a pretty good run up in the year to date. We've seen the shares up around about 128%, but today a pretty big pullback. We saw the shares down by 18.7%.
Now, David Jones too coming out with a really good result, a record result in fact, yet shares sold off.
I guess this was part buy on the rumour, sell on the fact, and also the market expecting an upgrade to David Jones's outlook, especially seeing some of the positive commentary that's been coming out in recent months around retail sales numbers. So I guess the market a little bit disappointed that they've stuck to their initial outlook for the current financial year, which is profit after tax growth of between 0 to 5%. If we have a look at the actual result came in ahead of market expectations. It was a record result. We did see growth of 6.2% in terms of net profit, but revenue fell by about 5%. The second half of the year was much stronger than the first half of the year. The second half of the year actually saw a jump of 36% in profit after tax compared to the previous year. So that was ahead of David Jones's own guidance, which was for growth between 20 to 30%, which he gave at the end of June. Now, part of the reason why it has managed an increase in net profit, even though revenues have been going backwards, is because it's been maintaining a pretty aggressive cost-cutting program, and that's going to be great news for David Jones's business once revenues do bounce back strongly, because they do have a leaner, meaner structure in place. We have a look at David Jones's share price. The shares are up around about 80% in the year to date in 2009 so far. So we did see a pullback today of about 3.9%, but still pretty much near the 52-week high for David Jones's share price.
Yeah, they're doing pretty well, aren't they? Julia, thank you so much for that. We'll speak with you again tomorrow.
Thanks, Brady.